If we start with Europe, once again, it's probably not as good as wished for, but probably less negative than expected in a way. What we have seen of late is the PMI are quite good at the highest since 15 months. We've seen of late the confidence from the German industry, which is at the highest since 2022. So why are we there? Because we had this agreement between Europe and the US, and this is 1/3 of the world trade between Europe and the US. And the 15% tariff, at least we have a tariff, we have a target, we know how to do business around that, and I think the shock to the European economy is going to be limited in that context, and we see that with the PMI, the IFO, but as well with the second quarter numbers. For instance, France, plus 0.3%. Germany is struggling, but should be benefiting from the big spending plans on defense and infrastructure especially. When we look back to the US, the situation is a little bit different in a sense that we see rising unemployment. The head of the Bureau of Labor Statistics has been fired for this reason, but the numbers are not that good. We see that inflation is still rising up toward 3%. So basically, the situation is not of a stagflation, but clearly the shock to the US economy is quite confirmed. We were expecting 2.7% GDP growth for the US. We shall be around 1.5, but definitely a big shock to the US economy. China, we are revising up the number for China, probably towards 5%. So we see that the shock for the Chinese economy is very limited, if not positive, because we have this rerouting of the trade benefiting for China. It's not the case for India. With 50% tariff, obviously, the shock will be there. Market-wise, we see a very different situation between Europe and US once again. The bar is very high for the ECB to keep cutting rates. Probably we still see some room for 25 BPs toward the final 175 rate for the ECB, while in the US, probably, Jackson Hole, Jerome Powell confirmed that we have some room for a small step, probably 25 BPs in mid-September. When we look at valuation of stock market, again, we still look at some very stretched valuation when we look at companies like Palantir, 400 times the benefits. It's very, very expensive, so it has to deliver now. All the question will be around the valuation of artificial intelligence. We hope it will be more intelligent than artificial.